I don't know how to pop the chat out. Hey, everybody. Can you just see if you can see me? Hey, everybody. Let me know if you can see me or if you can't. I think you guys can see me. And I think you guys can see my screen as well. Yes, perfect. So welcome to Wednesday. Thank you guys for being here. Let's see. Can see you, can see you, can see you. Perfect. So I want to thank you guys for your attention. Thank you for being here. I hope you guys are ready for another amazing session. I want to do a lot of like Q&A today because I get a lot of questions on my YouTube channel. I get a lot of questions via email about different trades people are in or how certain things work. And I want to make sure that I answer those. So I think these sessions, I'm probably going to move this session. I'm gonna at some point over the next few days. I know I said this, I think a session or two ago. Move this to a real live platform because this is this paper account. I just haven't had time to open a new account. My daughter's been visiting New York. I'm flying to LA tomorrow. So I've just been busy with a few things. But over the next few days, rather, I will take care of that. And then this live session will most likely go to Mondays and Wednesdays. But stay tuned for that. In the meantime, today's Wednesday, and we're going to do an amazing session. And I'm going to do a lot of Q&A. And we're going to start with walking through the positions because that's always the first thing that we take a look at, especially when we're already in positions. So you guys might remember that we have some IBIT, right? IBIT or IBIT, potato, however it is that you pronounce that. And that's been coming down. In fact, IBIT today is down a little bit more than 4%. We could take a look at the chart. Here's a 1-year chart, and you'll see for the past maybe 6 weeks or so, it's just been sliding from $70 per share down to $50 per share. So it's gone down about 30% approximately in the last 5-6 weeks or so. This is based on crypto, Bitcoin. And a lot of times people say like, well, how does that work? Like, how does that work if you buy shares, Michelle, and then your stock goes down? Listen, you guys have to be prepared for your stock to go down because it always happens. In fact, if we look at this chart, it's kind of sideways, it goes down, and then what happened afterward? It went all the way up, right? So all stocks, no matter what ticker you look through, you're going to have a similar pattern where stocks go up and stocks go down. So you don't want to be like surprised when your stock goes down. So you have one of two choices, right? You can either sell your shares, right? So you paid, let's say, $50 per share or $60 per share, and then it goes down to 50. You can sell them, and then what happens? You take a realized loss, right? If you sell your shares for less than what you paid, you take an actual loss, which means that money comes out of your pocketbook, right? You can say it like that. It's not a paper loss anymore, but it's a real loss. Or you can buy more shares and average your cost down. Now, a few days ago, I put a really cool spreadsheet, and I'm going to pull it up here to calculate like how does that work and how does that calculate my share cost. If I bought, let's say, 100 shares, I just put these numbers in right before this session, and I used this IBIT position, right? So I had 100 shares that I purchased last week at $59.50, right? That's the trade price. And then I also have this $50 put. What does a put mean? That means that I took in premium, in this case, $72, and I'm committing to buy 100 shares, but only if the price comes below $50 before it expires on the 21st. In this case, you see the expiration date right here, November 21. And what you want to do is you want to kind of understand and get a sense ahead of time before you make a trade, like where's that going to put my average cost if I did have to buy those shares, right? So if I have 100 shares, now you could do this with a calculator as well, and I'll show you how to do that. I'm a big believer, like, don't give a man fish, like teach him how to fish, right? So it's important, like we have tools that we use, but it's important to understand the mechanics of how that works because it helps you understand what's going on a little bit. And then also, like, if you didn't have a spreadsheet or a tool to use, you could just do that yourself so you understand the mechanics of it. So let's use this IBIT as an example, right? So I have 100 shares of IBIT that I purchased for $59.50. And then if I was to buy another 100 shares at $50, that would give me a total of 200 shares at an average price of $54.75. And the way you can do it is like this, right? When it's 100 law of this and 100 of that, it's kind of easy on the math. You would just do $59.50 plus $50, which is the other lot, right? This other 100 lot. And then you're going to divide it by 2. So it gives you your average price right here, this $54.75. Now, what if I purchased another 100 shares at, let's say, I don't know, $47.50? And we'll look at a $47.50 put in a moment. Where would that put my average price per share? Now I'm going to have 300 shares at $52.33. And we can check that math just to make sure my spreadsheet is right. $59.50 plus $50 plus $47.50. And then we're going to divide by 3 because in this case we have 300 shares, right? So my math is right. So $52.33. Does that make sense to everybody? Let me take a look at the chat here. And I'm going to look through all of these messages, but let me know if that doesn't make sense. Listen, there's not a lot of math when it comes to trading, but there is a little bit of math. Just like there's a little bit of math in life in general, right? You don't have to be a math guru or like a statistics, expert or somebody that's really good at, I don't know, what are those other math things that people take in college? I can't even think of that. Geometry or whatever. Those other things. You don't have to like be an expert at these things, but you do have to know some basics on how that works because you want to make educated decisions and you want to have a plan in place before you put a trade in. And then let's say, your stock starts coming down and then you're frantic and you don't know what to do. And then you feel some emotion. And then you end up selling your shares perhaps for less than what you paid. So generally speaking, what I do when I'm trading something is I believe in that stock, right? So if the price comes down, I want to buy more shares as the price goes lower because I know over time that's going to come back. And also, here's the thing, guys. When I'm averaging my costs down, then I only need perhaps a little bit of a pop to, let's say, sell those shares via a covered call or something like that. So let's take a look. Since IBIT is down 4.5% today, I mean, the best time to trade puts, to sell puts, is when the stock is down, right? Because we're going to get paid more for the risk that we're taking. So let's take a look at this Friday is November 21. Let's look at next Friday because today's already Wednesday. We only have a couple days left of this week. Let's just take a look at next week. So I could do a $47.50 put, right? So it last traded at $74, 74 bid, 82 ask. The delta is 26. Let's calculate our rate of return, right? So if we're making $74 and we're putting up $47.50, right? Not using margin. And I'm going to talk about margin in a moment as well. Where does that put us? That puts us about 1.5%. But this is for about how many days? Wednesday, Thursday, Friday this week, and then all of next week. So this is like 8 days, right? So the way I do it, if it's not, let's say we're not selling a put on a Monday where it's easy, we just calculate 52 weeks in a year. But I'm going to calculate how much per day and then annualize it out like that. So I do it like this. I'm going to divide this by 8 days, and then I'm going to multiply it by 252 because there's 252 trading days per year. So we don't count the weekends because the weekends aren't open. I'm making almost 50% on my money. It's not a bad deal. And then if I did have to, let's see, if I did have to buy those shares, that's going to bring my basis down to this. Now, I'm not including the put premium in that because if I get assigned after I sold the $47.50 put, my cost basis for these 100 shares is going to be adjusted a little bit. So I'm not including that. I'm just trying to keep the math easy, but it's going to bring my cost basis down to $52.33. So let's just go ahead and take a look and And let me show you how to do this. Remember, we're going to click on the bid, right? So we have our bid in the first column, then our ask. This is our last price. We're always looking at the delta. What's the statistical likelihood that the price is going to go below the strike price before the contract expires? We're also going to look at the implied volatility because we like to get a sense of what that is. And so I'm going to click on here. Now, if let me just pull this up here. If the bid is 74 and the ask is 82, we can kind of go in the middle, maybe a little bit less than the middle, and get a little bit better of a fill. We make a couple extra dollars that way. Actually, now it just changed to 81 bid. 81 bid, 82 ask. So I'm going to just sell this contract at $81, and I'm going to hit confirm and send, and then I'm going to send. And we'll see, it didn't fill yet. See, this is the deficiency with a paper account. Even though I put the order in at the bid, I didn't see the fill yet. Oh, there it is now. Because paper accounts work a little bit differently. So it's going to be much better when I show you guys a real account. So now I'm going to just check and make sure that came through, right? So here on the monitor tab, here's going to be my positions. Let me just kind of close that. And let's see. So here's my 100 shares, right? We didn't talk about Big Bear yet. And then here's my contract. So here's the 47.50 put. And I sold for $81 here, right? Does that make sense? Now let's go over Big Bear real quick, and then we'll go through some questions. So Big Bear is the other one that we have already, right? So we have 100 shares at $7.01, and then we have a $5 put. So what we can do, let's just take a look. If I had 100 shares at $7.01, and then I have 100 shares at $5, right? And then I'm just going to delete these fields right here. If I was to get assigned on that, it's going to bring my cost basis down to $6. Now it's easier and better for me to sell a covered call, let's say 2 covered calls at $6, than have to sell it at $7, right? So it's a little bit closer and not that far away. So that's the reason, one of the reasons why we like to average down our cost, right? Let's go through some questions. Let me take a look here. Let's see. When is your calculator available? I'm not sure, Pete, which calculator you're talking about. I'm in the process, and I am really, tomorrow I'm flying. I'll share some personal stuff with you. Tomorrow I'm flying to LA, and I'm really going to, while I'm there, I'm going to focus 100% on 2 things. I've been making a video every day for YouTube, and I'm going to keep doing that. I'm committed to doing 1,000 days. Yeah. And I think it's been, I don't even know. I think it's been like 4 months so far. So it's been like, however many days that is, 130 days or something like that. I'm going to keep doing that. And then I'm also going to take time and really create these technology tools. So I was talking to a couple of people recently, actually, like I said, oftentimes people will send me emails or they put comments on my YouTube. And there's a lot of people out there that use margin that have no idea. I think they think that perhaps they think they understand how margin works, but they really don't. And here's the thing. Most people that are trading don't understand how margin works, number one. And more importantly than that, if you're not able to hypothetically kind of like calculate, let's say, okay, I'm trading, this ticker, and that ticker. If you're not putting in some sort of a tool, if that ticker comes down in price, you're going to blow up your account and you don't realize it. So let me show you an example on the stuff that I'm kind of creating. This is just an example account. I just kind of put some, 100 Tesla, 100 Netflix, and 100 NVIDIA. And this is just an example of a margin account. And then this shows you, let me just clear these fields. It's got this hypothetical drop percent. So this is what's important, and this is what's missing. I'm telling you, this is missing on all broker-dealer platforms. I've been trading for a long time, like 30 years, and I've been with lots of different broker-dealers, and I'm telling you, no broker-dealer has the ability where you can kind of like hypothetically illustrate where a margin call is going to happen. It's not there. Maybe you think it's in Thinkorswim, but it isn't. And I mean, they do have some tools like there's an analyze tab, and you can kind of see like separately what happens if this ticker goes to this price or something. But this is more of like a comprehensive, okay, I have 300 shares in my brokerage account as an example, and I have 100 of Tesla, 100 Netflix, 100 NVIDIA. I have a $30,000 account just as an example, but you'll see here that the market value is almost 70,000. This is just an example, right? So what does this mean? This means like this is an example of using margin, right? So you have $30,000, but you have $70,000 worth of stock. And this will show you your excess. Like your excess is kind of like your cushion. How much cushion do you have? When this goes negative, that is what creates a margin call. What's a margin call? A margin call is not having enough money in your account to support your positions. And then depending on who you're with, the broker dealer can either just liquidate your positions. And typically, if you have a margin call, that means your stuff has gone down, right? And so if you're going to liquidate your positions, you're going to turn a paper loss into a real loss now. So that's a really bad thing. So you want to avoid that, right? So something like this application, and I don't know, Pete, you can answer me in the chat. I don't know if this is exactly what you're referring to, but something like this, you need to have something like this in order to be smart about what you're trading. Because as an example, as it stands now, 100 Tesla, 100 Netflix, 100 NVIDIA, okay, I got $6,500, right? So I have enough cushion. But what happens if Tesla goes down 10%? And then what happens if Netflix goes down 20%? And let's say minus 0.2. And then what happens if NVIDIA goes down 15%? I don't know. Let's take a look. You're still okay, right? But let's say it goes down 20% instead. Okay, now you have a margin call. Now you're negative. So I guarantee you, I talked to so many people, and over 30 years of trading, I've spoken with lots of people. Nobody ever simulates this. This is important. So this is kind of like an example of stuff that I use that I'm creating for other people to use. So again, Pete, I don't know if that's what you're talking about, but this is super cool. All right, let's go through some of the questions here. Let's see. Strategy after the stock price drops drastically under the strike price. And if you guys don't mind, I know probably you're typing quick, but please type so I can understand what your question means, because sometimes the questions aren't fully, I don't understand what they mean. So I'm going to pass on that for now. The Netherlands, I love it. So Tony in the Netherlands, I appreciate you being here. Listen, regardless of where you guys live, you can live wherever and you can trade options. You can live in Canada. You can live in Europe. I lived in Southeast Asia for a couple of years, actually, until very recently. On and off, I was back and forth, the US and Bali. But my point is, you don't have to be an American to trade. You can be in other countries. Sometimes people ask me what broker dealer is the best. I know, for example, and I'm not here recommending any broker dealer specifically, but I know Interactive Brokers is very, worldwide friendly. So I know lots of people that lived in lots of different places that have had Interactive Brokers accounts, and that's worked well for them. Knowing your statistics is key, because listen, here's the thing, guys. I saw a quote the other day, and I'm trying to think of exactly what it said. I think it said something like, a margin call didn't blow up your account because it's always there. Like the math is always there. Okay, what happens if Tesla goes down 50%? I don't know. A stock can go down 50%. Okay, now you went from having a $6,000 excess to a negative $11,000 deficit, right? And let's take a look at MicroStrategy. MicroStrategy has historically been one of my favorite stocks for a very, very long time. But let's take a look at where that's been. This is a 1-year chart. This 1 year ago was almost $550, and now it's $183. So if a stock, if a stock is $550, right? I will say $540, and it goes down let's see. Yeah. No, you can give it to him. Let's say it goes down 70%, right? I'm just using like rough math. Let's say 65%. Let's say MicroStrategy is 540 at the high, and then it goes down 65%. That's actually where it's been. Actually, it's a little bit lower. It goes down 65%. You don't need 65% to get back to even. Bro, you need 185%. Now you need 185%. And a lot of times people are trading and they don't understand the math. Listen, again, you don't have to be a math guru and you don't have to be an expert, but you have to understand it a little bit. Otherwise, you're going to blow up your account. And number two, just use tools like this. This spreadsheet I put in YouTube for free for people that have. Like, I don't know, it's helpful for me. Listen, I've been trading a long time, and I've had accounts that have blown up before. Blown up means you lose a big chunk of your money. I don't want to see that to happen to other people. So I'm happy to share a lot of those tools. And when I put those out in an application, which is coming soon, I'll let you guys know about it. Make sure you guys are in my inner circle because that's how I tell people about that. All right, so let's go through some more of your questions. You don't have to know everything to be successful. Listen, there's a thing called analysis paralysis. You don't have to be studying charts all day or be an expert in certain things. There are just certain things, and I try to highlight those things that you need to know in order to help you be successful. So that's absolutely correct. Good point. Can you please take a look at DEFT, call for strike price of $5 and analysis if that's a good deal? DEFT, I don't know what that is, but let's take a look. DEFT. Let's see. Did that come up for me? Oh, that's like I don't know if that's what you wanted me to look at. That's like a dollar stock. Maybe you typed something wrong, or maybe I'm reading it wrong. You can clarify in one of these messages. Let's go to the next one. I sold a put on Applied Digital, APLD, 21.50 strike price. I took in $41 in premium. The expiration date is 11/13. Well, that would have already passed. I feel good about this play after watching your videos. I think you might have typed something wrong because today is the 19th of November. So the 13th already passed. But thank you for watching my videos. I appreciate that. Let me know in the chat here, what ticker do you want me to walk through, or what questions do you have? Can we get a copy of the average down template? That's already online. So that is a couple of days ago, I made a video. Let's see. It was, let's see. This one. Stocks down 50%, get back to even. It's in the pinned comments on that video. So that's where that lives. So you can find that there. Let's take a look at the next question here. Let's see. I answered your question with the BBAI example. No worries. You're quite welcome. Not sure if you covered this, but can I keep selling covered calls and buy to close for the same contract many times in a day? That's a really good question. So how does that work when I sell a covered call or when I sell a put? The answer is yes. You can keep flipping that as much as you want. So recently I've had a lot of MicroStrategy, man, and that has come down a lot. And typically I don't sell a covered call underneath my basis, but my basis is so high and the stock is so low right now. What I was doing the past little bit of time is wait for a pop-up. I think maybe yesterday, the day before, MicroStrategy was up a bit, 5% or something like that, I remember correctly. I sold the call, and then some time goes on, and then the stock slides a little bit. I buy the call back. So you have the flexibility all the time when you're short a call, right? Or a put for that matter. You can buy that contract back at any time. Now it's going to have a market value. So let's go through an example. So let's look at, I don't know, let's just look at, if we look at IBIT or IBIT, whatever, as an example. So this 47.50 put that I had sold, right? How much did I get for that? I forget. I had gotten $81 for that, right? So that's the trade price. And now it's trading at $72, 72 bid, 84 ask. It last traded at 82. So it's kind of the same as what it was. But my point is this: all contracts will have a market price, right? So this is the last price it traded. If you're buying it back and you put an order in at the ask, you will automatically be filled because there's already sellers lined up to take the other side of that trade. So if I wanted to sell this or buy this back rather, and I put an order in to buy it back at $84, it would be filled. Of course, I can kind of go in between the bid and the ask, maybe a little bit closer to the ask price. But you have that flexibility to buy a contract back, and you're not limited to, I can only do that so many times per day, or I can do whatever. Now, you do have what's called pattern day trader. So a lot of times, not a lot, but sometimes people will talk on my YouTube channel about pattern day trader. If your account is under 25,000, you're restricted to day trading. So you can't day trade more than, I think it's like 4 times in a 5-day window. And that's applicable regardless of whether you live in the US or you live in another country, or you're trading through Schwab or Interactive Brokers or Fidelity or whoever. It's like an industry rule, right? So you do have a restriction. If your account is under 25,000, you can't go in and out more than 4 times over a 5-day period. But if your account is more than 25,000, you don't have to worry about that. And if you stay within those constraints, also you don't have to worry about that. So yes, you can buy back at any time, and you can do that, as frequently as you wish. Let's see. So thanks for doing this class. You're quite welcome. What's the best way to find less expensive stocks that's worth trading covered calls? That's a good question. So, I mean, you can watch my YouTube. I'm always doing like different videos on different tickers. Google is very helpful for certain things. There's certain like scanning software that you can purchase. I don't necessarily recommend any of those. I think probably like Google is good. You can start in looking at maybe S&P 500 stocks or Dow 30 stocks. Like those are okay, big companies, or trending stocks, and take a look at it that way. So I kind of have this list. I have a list that I sent out not too long ago, and so I don't know if you got that list, but I did send that to a lot of people recently. And let me just sort by. Let's see. Last, is this sorting? No, this is not sorting. So you can just take a look at that list as well. There's not really any good way to look at that other than Google. So I don't know if that really helps answer your question, but that's the answer. Can you drop the link of your inner circle, please? Yes. So, Nina, can you text something? I will actually, what I'll do is these videos after these lives, they go in my channel under the live section. I'll put the inner circle link in a pinned comment, so you can see it there. I'm not sure. I'm not very tech savvy. You guys might have seen that already. So I'm not exactly sure how to drop that here. FinViz. Oh, I have heard of FinViz. So FinViz is a good stock screener. So yeah. I think actually they have a free platform. Maybe they have a free platform and a paid platform. So thank you, whoever this user is that provided that info. That was good info. Let's see. I'm trying to sell covered calls on DEFT that I currently own as it has tanked $5 strike. So DEFT is the one that you wanted me to look at. Let's take a look. Let's see. DEFT. So first we're going to look at the chart. Oh yeah, this was as high as $5 and now it's at $1.05. So if you're looking at covered calls, so first of all, right off the bat, this is probably not a stock that you want to trade, and here's why. When you pull up the option chain for a stock and you see this, you see how there's November, December, February, May. That means it doesn't have weekly options, so it's not traded that much. So you really kind of want to stay away from things that are not traded that much. I wouldn't even trade this. I only trade stuff that has weekly options because it's got a lot of activity. It's easier to get in and out. When you have things that don't have a lot of action, you might say, you typically you'll have like a big spread between like a bid and an ask. I don't know what you can do with this particular stock because it's only $1, so I don't think there's anything to be done here. If it were me, I mean, I'm not here like giving specific recommendations because I don't know anybody's personal, thing. But I do know sometimes when you come across something that you don't want to take a realized loss. However, sometimes you come across like a decision that you would have made in the past that was the wrong decision. This might not be a stock that you want to sell calls on because it looks, a dollar stock. I think just sell the shares and put that money somewhere else is what I would say. Let's see. Nina dropped the Inner Circle link in the chat here, so you guys have that. But I'll also put it in a pinned comment. Let's see. Yeah, so when you have Lady Trader. Oh my gosh, I love that name, Lady Trader. And by the way, some of you guys show with the little crown. I think that little crown shows that you guys are like active on my channel with comments and things like that. So much appreciated. Yeah, thanks for that. The bid on the $5 strike is 0, so nobody's interested. Yeah, so you want to trade something that has that people are there, that you have a bid and an ask, and you have some sort of kind of narrow spread. I would say just sell those shares. Let's see. I'm just taking a moment because I'm reading this. So just to clarify on this DEFT, I don't know, just clarify what you're talking about. Are you talking about a $5 call and somebody paid $15 for it? Because $5 call is 0. It's going for nothing. So I mean, it's 0 bid, $5 ask. It did last trade at $3, so there is a trade for it. Yeah, I mean, if you're selling at the bid, or you can sell in between the bid and the ask. But see how you have 0, 0, 0 bid? There's no buyers lining up for that. So that's not a good trade. I would just get out of that. Let's see. FinViz we talked about already. Are the Google Sheets that you shared still available to download? Yes, they are. So on that, in this video here, I put them in that video. So do that soon because I don't know how long I'm going to leave that up there, to be honest. Because at some point I'm going to. I already started doing it, and I'm making a lot of progress. I'm going to have like a proper application, not a spreadsheet, not a Google sheet or a numbers or an Excel sheet, but like an online application. And it's going to be a paid version at some point because it took me a lot of like time, energy, focus, and experience to create those. And so at some point I'm going to sell those. So download it now while it's there, and it is there. Okay, so if I understand correctly, your trades are up to 90% cash secured put and not covered call. Are you buying deep in the money call leaps also? I don't do any leaps. So a leap is like a poor man's covered call, like you buy deep in the money puts, I think, and then you sell calls against them. I don't do any of that. There are people that do that from what I understand. And I think, it's hard to know, like, somebody had said Monday on this program, other people are doing this and they're successful at it. It's really hard to know if that's the case. I don't know. People talk about trading leaps. I find leaps to be a pain in the neck. And the reason why is this. First of all, it's kind of like against my ethics to buy options, because when I'm buying options, the mathematics is just something that I can't understand. I like mathematics that I can put like numbers in spreadsheets and I understand the statistical like likelihood of something. But when I'm buying puts, I could buy, let's say, a put that's in the money and it goes down and it doesn't necessarily, it's not like a dollar for dollar correlation, and then selling covered calls against that. What happens if the stock goes somewhere else? I personally don't do that, and I find it just to be difficult. Here's the thing, guys, about trading in general. And I think it's kind of like similar to life in general. Like things that like you do on a regular basis that's easy to do, that's sustainable, right? So like I don't know, like I like to have habits and I do the same things over and over again, not just with trading, with life in general. Like I wake up in the morning and I weigh myself every single morning, right? So like around the same time, before I eat, before I drink some coffee, I just want to pay attention to where I'm at. Not for necessarily just like weight or vanity or anything, but I try to understand like, okay, what's the food that I'm eating on a regular basis? How does that affect my weight? Anyway, my point is this: when you do something over and over again, it's the same thing and it's easy, it's sustainable, right? Um, for trading, I just find it easy to do, just sell a put on something good that you like and make sure the biggest thing is make sure you have enough money, right? So I think that one of the biggest things that make people lose is they don't think through ahead of time. Okay, I'm buying. Okay, let's look at my example, right? Okay, I'm buying 100 IBIT, and then I'm selling this put on it, and then I'm selling another put on it. And how does that look if it was to go down? How does that look if IBIT goes to $10 per share? What's that going to do to my account? Do I have enough money to trade that way? Am I using margin? If I am, is that going to blow up my account? Most people aren't thinking through those things. So if you keep things simple, sell a put, make sure you have enough cash, make sure you have enough money to buy more if it goes down, sell covered calls against it, and you don't have to calculate the delta on. A lot of times people ask me, actually I get this question like so frequently, what delta do you look for when you're selling a covered call? I just sell covered calls right over what I paid for them. And the reason for that is because I don't care about the stock. I'm not in love with any stock. I just want to use stock to create income, and that's it, right? So when you do things that are easy and easy to replicate on a habitual basis, it's just easier. So no, I don't trade leaps. Let's see. What is the next question? We're talking about open interest for Deft. I think Deft is a crappy stock in it because it's only $1. And here's the thing, like when things get to be like $1, now you have to be concerned about a reverse split. And let me tell you something, I think I talked on the last session what a split is, what a reverse split is. When things are super cheap, you don't want to trade a stock like that, because if it's $1, okay, it doesn't have much more room to go. $1 is like $1 away from zero, right? And so maybe it goes bankrupt, and then if it doesn't go bankrupt, if it keeps coming down, it's gonna do a reverse split, and you don't want to be anywhere close to something like that. Yeah, so it's just not a good stock. Where on your account can you see if you have margin? Good question. See, I mean, you can calculate it. It depends on what brokerage firm you're with, and it's hard for me to tell here. You can like calculate. Let me go back to my example here. So if you look at your account and you see, okay, I have 100 of this, and here's the price of it, and there's my market value. If your net liquidity, this number here, right here, this 24,145, if that number is lower than the total of your market value of your stuff, that means you're using margin. So that's how you want to be able to tell that. Let's see. Chipotle stock purchased a month ago at 33. Oh, let's look at Chipotle. I think I talked about this the other day. What's the ticker? I think that's CMG, if I'm not mistaken. My son loves Chipotle, so let's take a look. So here is a 1-year chart. It gapped down here, it gapped down again. Let me see what your question was. Chipotle stock purchased a month ago at $33. Now it's 31. Is this gold one to do a put? I'm not sure exactly what you're saying. I don't really understand the question, but let's look at Chipotle. And if you want to clarify in the chat here what your question is, I can help you a little bit better. But here's Chipotle. Let's say if you purchased it at 33, you should have a $33 short call to that. So if you own shares at 33, sell a $33 call against it. Right here we can see it's not going for much money though. For this week it's $3. It's only a couple of days left. So let's look at next week. $33, $15. There's a 17 delta, and the reason why is as a stock goes lower, the calls become less expensive. As far as if that's a good stock or not, I don't know. I'm not sure. I mean, I think Chipotle. I never traded Chipotle myself. It's as far as if it's a good stock, only you can make that determination. This looks pretty healthy, right? So it gapped down again, gaps fill. It's made some lows. Is it a profitable company? Yes, it's a profitable company. It's been around a long time. I don't really trade retail kind of stuff. Restaurants. I find restaurants to be, a long time ago, I used to own a bar and grill. I was 21 at the time. And it's a hard industry. And from a food perspective, a lot of times people will think like restaurants make a lot of money, or let's say you go out to dinner and it looks super busy. The markup on food, I can tell you, is not that high. And there's also like a lot of spoilage. There tends to be people that give things away for free sometimes. So there's a lot of like money that gets, flushed, I guess you might say. So I personally don't trade, restaurant type stocks, and I also don't trade airline stocks. Airline stocks are typically not profitable. And so those are industries that I don't typically trade. So I'm not sure if it's good or not, but I can tell you that if you have 100 shares of it, you should sell a covered call against it, at least to bring in income. Let's see. What other questions do we have? Still trying to figure out how to place a put or covered call new to this. There's a couple of good, I put this in the, I think in the pinned comments before. I have some really good videos on YouTube, some long ones. Like I have a 6-hour one. I think let me find it. It's called, let's see. I think it had like this one right here. This is like a 6-hour video. 2 secrets to make cash every week. I encourage you to watch this. A lot of times people will ask questions, and I think I used this analogy the other day. It's kind of like this. Let's say I'm watching a movie, right? I'm watching a movie in the living room, and it's halfway through. And then my daughter comes in, and she sits on the couch. And she's like, who's that guy? What's going on? How does that work? And she feels lost because she missed it from the beginning. Options are kind of the same thing. So, I mean, if you're watching this live, it's amazing, and I appreciate you being here. But you want to take some time to learn the fundamentals, and then it's not as confusing. So oftentimes people will just be looking for, I'm not saying this is you, but oftentimes in general, people will be looking for a shortcut, right? Like, well, how do I learn quick? I don't want to watch it. This is 6 hours, Michelle. I don't want to watch that. Listen, it's 6 hours. Watch it on 1.25 speed. Do that. I mean, you got to put a little bit of time, and I don't mean this directly to you, whoever asked this question in the chat. I'm just saying in general, you got to put some time and effort into learning the foundations. And then it really is only 2 strategies: selling a put, selling a covered call. There's a little bit of detail to that, but once you put the effort in to learn the fundamentals, it becomes very easy. So hopefully that helps. But watch that video online. It's really good. Let's see. I sold my first little call on a small stock I got. It expires December 16th. I got 28 bucks, but the stock is down some. That's good. Bravo. So if you sold the covered call, bravo. That's good. Listen, here's the thing. Paper trading is not going to give you experience that you're looking for. What's going to give you experience is just doing it. Like just jump in there. You already got some stock, sell a covered call against it. You cannot lose money in a covered call. Why? Because you already own the shares. So you already have, you're already subjected to volatility, right? A paper gain or a paper loss on the shares. So that's not anything new. And when you sell a covered call, you literally get free premium. You put it in your pocket. You keep that no matter what happens. And then you sell your shares if the stock goes up. So it's literally like the best thing ever. So bravo to you, Junabad. Yeah, bravo. What size account would you need to make $10,000 a month? Good question. So, I mean, it's kind of hard to target. I always use like, let's say 50% as a good, let's say starting metric. So if you're trying to make, let's say 10 grand a month, let's just kind of, that's like 120, I think, a year, right? So let's say if I couldn't do that myself, I would do 10 grand times 12. So you want to make 120 grand per year. So that means you'd probably want to have, let's see, like 180 times 50. No, a little bit more. I mean, you probably want like 200,000, somewhere in that neighborhood. I mean, it's going to fluctuate plus or minus, but that's probably a good starting metric. I would say whatever number you already have, like, okay, how much capital do you have right now? And then, okay, let's build a plan to create weekly income, right? And you want to choose tickers that resonate with you, tickers that you feel good about, that you want to use, and then start from there. So really, that's how I answer a question like that. Like, how much do I have? Let's say I start with $100,000. I'm probably going to make, maybe 50K per year. And what is that per week? That's like, I think a little bit less than $1,000. 961, somewhere in that neighborhood. Now it might be more or less if you're trading tickers, and then those tickers come down in price. Maybe you take in less in income, right? If you're using margin, you can make a little bit more, but you have to be super careful with margin that you don't blow up your account. So there's those considerations that you want to consider. Let's see, what other questions do we have? You can only do a covered call if you own 100 shares of a stock. That is a requirement. That's correct, because that's what makes it covered. So you can sell a call. So you can always sell like a naked call if you have options approval to do that. I never, ever sell naked calls because that's super aggressive, right? A stock can go up to infinity, and if I don't have the shares to cover it, so you always want to that's what makes it covered, right? Which means that you have the shares. So you're correct. You do need 100 shares to sell a covered call. Let's see, what other questions? Did you sell a cash secured put on NVIDIA for earnings play? No, I didn't. But I do trade NVIDIA on and off. I haven't looked at NVIDIA recently. Let's take a look at it. NVIDIA, let's see. So 186 per share. We always look at the chart first. If I was to sell a covered call, or a cash secured put rather, let's see what they're going for. If, let's say, I wanted to go for next week, right now the stock is at 186 per share. I mean, the lower the delta, remember we talked about this a few times, the lower the delta, the less likelihood that there is for that stock to come down to that price. Of course, you make a little bit less money, so you have to weigh that, right? So 5 delta means if you're trading 5 delta puts all the time, you're only going to buy the stock about 2% of the time, but you're not going to make as much money. Let's say $57. I don't know. Let's take a look and see if that's a good deal or not a good deal. $57, and that's on a 150, 250. So I'm going to put up $15,250, right? So I'm making about 1/3% over 8 days, and then I'm going to annualize it out, 252. Making about 11% on my money. That's not that much. If I was using margin, of course, that's going to be a lot better. How do we check if we're using margin? We're going to click on the bid, and then it brings up our order entry box here, right? And then I'm going to right-click that. I'm going to analyze the trade, and this tells us that the margin requirement, instead of putting up 15,000, we only have to put up 1,500. So we get quite a bit of leverage with what we call it. But again, if you're using leverage, you want to make sure, like, okay, do I have enough money to support if NVIDIA goes down, I don't know, 40%? No, I don't. Like this as an example. So me personally, I didn't trade that for earnings. But NVIDIA is a great stock. and I've traded that on and off for a while. Let's see. What do you think of Poet stock? I don't know. I never heard of Poet stock. What is that? POET. It's another inexpensive stock. It's down a lot, like 50% from a few weeks ago. Let's see, Poet stock. So when I'm looking at stock, Google's an amazing thing. Poet stock. I don't know, what is it? Let's look it up. Poet Technologies. They're out of Canada. It looks like a small company, only 180 employees. Probably not something that I would trade. And plus, when it's inexpensive like that, let's see. So if it's a $4 stock, I mean, maybe it's got high volatility. High volatility means you have a lot of swing. You're getting paid a lot. I don't know. I never really looked at that stock. Let's see. Who is the woman on the cover of the video? Quite beautiful. What video are you talking about? Are you talking about this video? That's me. That's me in all these pictures. ChatGPT helps me do my my thumbnails. So yeah. Let's see. I do like that picture though. That's actually one of my favorite pictures. Sometimes when I'm doing these videos, I don't know, like my hair is up and I've been kind of like running around all day. Like I said, my daughter's here and we've been kind of doing stuff. I don't spend a lot of time with making sure the lighting's good or that kind of thing. But yeah, thank you for that. Let's see. I watched the 6 hours and learned more from that video. Yeah, that video was really good. I have a lot of really good videos on YouTube for free. And I'm not just saying that because I made them. A lot of it is really good content. Let's see. That is why the first process is to sell puts and AKA cash secured put, right? CSP. And then if it goes to your strike price, you will be assigned. So that's a good point, Junabad. So here's what that means. That's actually, that's absolutely correct. So a lot of times we call that the wheel, right? So like the best thing, especially when you're new, is just sell a put on something. Then if it comes down, then you buy the shares, then you can sell a covered call against it. If you're driving income from cash, right, that's going to be better than driving income from stock. So that's a very good point. Thanks for making that. Let's see. After I'm assigned the shares at the strike price, how quickly will my covered call sell on Monday? Could I be in danger of the price going much lower than my assigned price and getting stuck? So here's the way that works. That's a good question. So let me clarify. When you have when you sold a put, right? Or you can say when you have a short put, those are kind of synonymous. It's the same thing. So when you sold a put, on Friday when the market closes, the price was either higher or lower, right, than whatever your strike price is. Typically, 99.9% of the time, if it closed below your strike price, that means you're gonna be assigned those shares. So typically, depending on your broker dealer, you're gonna see those shares show up in your account. You're gonna probably see them maybe Saturday, or for sure you're gonna see them on Monday, right? And you can sell a covered call Monday right when the market opens. So when can you sell a covered call? You can only sell contracts or options in any case, calls, puts, whatever. Sell them, buy them. You can only trade options while the market's open. So 9:30 till 4 o'clock Eastern time, Monday to Friday, not including holidays. Stock you can trade after market, so that's a little bit different. But that's when you can sell a covered call is right when you have it. You could, if you sold it, let's say Friday, let's say you're going to be assigned, or you're pretty sure you're going to be assigned, you could sell a call on Friday. It would be a naked call though. It's not covered until you have the shares. So best practice is you wait until you have the shares, which happens Monday morning, first thing. Oh, were you being mean? I knew it was you. It's a dumb question. Sorry for being mean. No worries. Listen, it's all good. So I'm glad that you guys are putting comments in the chat. Did you talk about BMNR yet? If so, I sold a put $31 put for $1 a couple of days ago, and due on Friday, but I'm willing to hold the stock. I didn't talk about BMNR, but I can look that up. BMNR, that's a Bitcoin company. Bitmine, I think that's Bitmine, right? So what did you say on here? I sold a $31 put a couple of days ago for $1. So right now it's $29.29, which means that it's in the money, right? Because in the money means you sold a $31 put, and right now it's trading a little bit lower. And you just said in the chat you're totally okay buying the stock, as you should be, because you sold the put. And then Monday, assuming you get assigned, you turn right around and you sell a call against it. And how much is a $31 call going for next Friday, November 28th? Well, that's going for last trade $155. So here's the beauty of that. And that's an amazing thing, right? That's that wheel, the wheel strategy. I sold a put for $1 and I got paid $100. The stock went down. I don't mind owning it because it's a good company. And then I sell a call against it and I make another $155. So that is trading options. So we're not falling in love with stock. We're not hoping and praying that our stock goes up, right? What we're doing is we're just creating income in our pocket from week to week. And so bravo to you. That's a good job. Let's see. I'm going to go through 2 more questions, then we're going to call it for the day. But I appreciate you guys being here for sure. What are your top 3 stocks for options right now? And somebody from Amsterdam. I appreciate that. I love getting people from all over the world. I like the Bitcoin stocks. I like MicroStrategy. I like Coinbase. I like Ether. I love Tesla. I've been trading Tesla for I don't even know how long. Those have been typically my favorite stocks. I like NVIDIA a lot as well. And typically what I do is I just trade the same ones over and over and over again, regardless of the price. Sell a put, get assigned the shares, sell a covered call, and just do it over and over and over again. What do you think about selling a covered call on SCHD? I don't know what that is. SCHD. Let's see. SCHD. Let me just Google it and see what it is. SCHD stock. Oh, that's Schwab. Oh, wait, Schwab US dividend equity. I never heard of that. I don't know. I'd have to look it up. Let's see. First, we look at the chart. Let's take a look. So, $26 a share, $27 a share, and they have weekly options. I don't trade a lot of ETFs. I can tell you that. Let's say if I wanted to. Oh, it looks like there's no a $26 put, 0 bid, 5 ask. The implied volatility is 16%. It doesn't look that good to me. I'm not sure what it is, but I wouldn't trade this. Good question. One more question. Could they sell that call today before they got assigned? So I think I did answer that. Yes, you can sell a call before you get assigned. It's a little bit more aggressive to do that. And the reason for that is because you don't have the shares yet, right? So I said that a few minutes ago, and you might have put this question in after or before I answered it, rather. Sometimes I do that. So sometimes, especially if the stock is going up and I'm pretty sure I'm going to get assigned, I can sell a call against it. Now you have to have the options authority to do that. There's like level 1, level 2, level 3, level 4. So an uncovered call is technically is considered pretty risky. So you'd have to have approval to do that. Best practice would be to wait until Monday to make sure you get assigned the shares and then it's covered. Let's see. Coke, K-O. I never traded Coke ever, I think, in my whole life. I'm like very anti Coca-Cola. Yeah, I don't really like trading things that I don't believe in, and I think Coke is terrible for people. I haven't drank soda at all in like the past, I don't even know, at least 10, 15 years or something like that. I used to drink a lot of soda as a kid. I used to have eat a lot of things that were not good for you as a kid. So personally, I never traded Coke, but let's take a look. $71 a share. It's certainly not going to go out of business because it's a super big company, right? Let's see. So if I was looking at puts, the volatility is super low. So like, okay, if I sold a $70 put, right, I'm going to make 28 bucks and put up 7,000. See how the volatility is 16%? I'll tell you the rate of return is going to be low. But let's take a look and I'll calculate it for you. So let's say if we're making $28 and we're putting up 7,000 and we're making this for 8 days, right? Because November 28. So divided by 8, and then we're going to do times 252. So we're making 12% on our money. I don't think that's enough to take the risk, me personally. I mean, typically I'm looking for like 100%, annualized rate of return. I don't mind 50%. Sometimes I use 50% as like a good kind of like a metric, like a rule of thumb, or, on average, how much money can you make? But, to make 12% and take risk like that, for me, I wouldn't do it. But it's totally up to you. Let me do one more. I keep saying, let me do one more question. Let me do one more question. When you sell a covered call, do you get assigned, or how do you buy back your call if you think you might be assigned? All right, that's a good question, Nikki. So first of all, if I think I'm going to be assigned on my covered call, I wouldn't buy that back, probably. I would let it be assigned. So you could always buy your put back or buy your call back, right? So it's going to be at the market, which might be more or less than what you paid. So you're going to see the market value right here. So let's say if I'm looking at Coke as an example, and let's say I have a $71 call, I would just click on the ask. So you click on the ask, and it brings up, a buy box, and then you would just buy it that way. Now, I definitely, like, let's say if I think my covered call is going to be assigned, and it depends on, why. Sometimes there might be a scenario where I might buy that back. But usually, if I think it's going to be assigned, I want it to be assigned, because typically I don't want to have shares. I want to keep my money in cash, and I want to drive income off that cash. And if I like that stock, I could just sell a put on it for next week and then buy it only if it goes down. What you never want to do, and I know I talked about this lots of times before, you definitely don't want to buy your contract back for more than what you got paid, right? And take a realized loss and then sell a new one on that same stock higher, with a higher strike for next week. So that's called rolling. You definitely don't want to do that. You could if you want, because there's a few people on my channel that think that that's a good deal. So if you want to do that, that's cool. But I think it's not a smart decision. So yeah, hopefully that answers your question. All right, so we are going to wrap it, because that was a little bit over an hour. I appreciate your time. So stay tuned for Friday. So the next session is going to be Friday at 3 o'clock. Over the next few days, I'm going to create this new account, and I'm going to use, instead of using this paper account, I'm going to use a real account. So it's going to be a little bit, better education for you guys. And make sure you guys are in my inner circle. So when I do those applications, they're going to be super, super cool. You'll be the first one to know. And keep the questions coming. I appreciate the interactivity. I appreciate you guys' interest in options trading. Let me know your successes. Let me know what you guys are trading. What questions do you have on which tickers? And I'll catch you guys Friday. Cheers for now.